Someone that has a low level of debt, they won't be under so much pressure. Banks give, now back in the day, you could get, I think it was 90% loan to value mortgages. That means that the value of the property, you were able to borrow 90% of the cost. When the crash happened and they tightened up all the restrictions, they quite rightly brought that down to 70% loan to value. But still, 70% loan to value on a high value of a house means that you have a high level of debt there. So you're more at risk. And I'm saying this myself, like most of my mortgages are at 70% loan to value. So again, you know, we're at a bigger risk here. We're taking a bigger risk rather than say someone that has owned their property for a long time. They've had many years of paying down their mortgages, or indeed, if you're unencumbered, even better. So debt can be good and bad. In most cases for property, debt is actually good, but in times of high inflation or interest rates, you've just got to watch that you can repay that mortgage every month. The other thing in relation to debt is it's actually not a bad thing, because you have, say, a rental property that's, say, bringing in €10,000 a year. If you had no debt on it, so someone that, say, inherited a house and they rented it out, they would have to pay 52% effectively on €10,000 income. Someone that does have debt on the property, they get 10,000 for rental income, they can deduct the mortgage interest against their rental income, and they're only paying the tax, the 52%, on the net amount. So debt is good, and debt can be good or bad. You just have to when you're high, like a 70% loan to value, you just have to be really conscious of debt and making sure that you've got a good tenant so that you can keep on repaying. The next then is location, and are you in the rent pressure zone? Rent caps. Recording has started. Sorry, I'm just looking here. It says recording has stopped. Save recording. Let me go and. No, it says it's still recording. Okay, strange. Sorry about that. So location. Is your property in the rent pressure zone? And again, it all comes back to the debt then. As I said, the debt versus the rent pressure zone. So are your rents capped? If your property is not in the rent pressure zone, well, then, you know, you're not at risk as much. Now, the government or the RTB can decide, or there's a formula, I believe, that they can turn the property into a rent pressure zone as soon as the rents in that area, there's a certain calculation, and they can just turn it into a rent pressure zone at a whim. But they haven't done any more. They haven't added any more locations, I believe, since 2021. So it could be 2019 actually. So I believe that we're about 4 years of not having any new areas gone into the rent pressure zone. So if your property is not in the rent pressure zone, again, less risk. Vacant possession. So do you have vacant possession at the moment? Do you have a tenant? Do you have a HAP tenant? Do you have a tenant? If you have a tenant in the property, again, Majella will talk about notice periods and all the rest of it. You need to consider, I wouldn't sell with a tenant in it, because what's going to happen is, obviously, you're only going to limit your market to who can buy it, and you're expecting other investors to be able to buy that property. And if I was an investor, I certainly wouldn't be buying a property with a tenant in it. So in terms of vacant possession, I would, if you are looking to sell, I would attempt to, vacate the tenant first before you sell the property, because otherwise you're really narrowing your market, limiting your market. Again, there's going to be, it seems like the government are going to be bringing out something in relation to this, maybe, and we can discuss that later. So if it's vacant, you're in a better position to make choices. You've got more choices if it's vacant. Then the type of tenant in situ. So if you have, say, students in situ, again, wouldn't be worried too much. They're going to want to get out by come May. If you've got a family, it's going to be harder to help get them to move out. And again, as I said, if you've got a tenant in situ, it's going to be very hard to sell a property because you are limiting your market to investors, and most investors won't buy with a tenant in situ just because of the regulations that Ireland has in the rental market. You'd be mad to be honest, to purchase a property with a tenant in it. And then it comes down then to your personal circumstances. So I personally believe, now anyone can correct me if they believe I'm wrong, but I personally believe that given the regulations in the market in Ireland, and it seems to be increasing, I believe that there's not much room in this market for small 1-2 house landlords. I believe that the regulations are very high, and it's as I said, it's okay if your debt, if your level of debt is low, but if you're like an investor, say, that's working a full-time job, that's taken out a mortgage, taken out maybe a 70% loan to value mortgage, and you're working full-time, I just think it's such a difficult market with the rent caps. You can't increase the rents with the interest rates rising. So Finance Island now at 6.99%, effectively 7%, and there's talks that they could be going up to 8% soon. I just can't see how you can make a business, like how to make this work at the moment. So, but again, if you've got tenants there that have been there years and you really don't believe that they're good tenants, you managed to get the market price for the rent a couple of years ago, and you don't believe that they're gonna default, and your debt is either low or it's manageable, and there's a good margin there. You want to make sure that you have a good margin between the rental income that you're getting in and the debt that you have, or the mortgage repayments that you're paying every month. And look, if that's working for you and you've got a good letting agency, well then, it all comes down to your own personal circumstances. But I personally believe that we're going into more of a state of needing to have these like larger landlords or someone that's getting into this as a full-time kind of a business. So it's just my views. Look, if anybody has any kind of, if you want to challenge that, put questions in the chat box, put your comments in, and we can get some bit of engagement going. But that's just kind of my views on that. So, and are there any other options available to a landlord? So I suppose, look, you can hold on to your property. And again, we've talked about debt. Are you breaking even? Are you making a profit? Rental income minus your mortgage repayments, minus any other costs that you've got. We went through the costs last week. We've got insurance, we've got local property tax, maintenance, management fees, any kind of, tenant changeovers, unoccupancy when tenants move out. So are you breaking even, basically, which means is your income equal or more than your costs? If they are, and you feel like you can weather the storm before you can increase your rents again, well, then keep hold of it. It's an asset at the end of the day. Like Robert Kiyosaki, who's the author of Rich Dad, Poor Dad, if any of you have ever heard of him, he talks about assets and acquiring assets. If you don't acquire assets, effectively, you're going to have to work for the rest of your life to earn money, So like property is an asset. It's just that it's in Ireland, it's a very regulated and a very restricted asset. But at the end of the day, if the property is in an area that can sell to a family as well as an investor, and therefore it's got a good market, a good resale market, well, maybe hold on to it for a little while, because the property prices, residential property prices in general, are still creeping up. So you still will get that capital appreciation, but it's just it's just very risky whilst you still own the property, I suppose, when you've got this, when you've got a high level of debt. And then again, tenants, it all depends on your tenants. So I suppose, look, I was only talking to a letting agent today, and she has mostly HAP tenants for all of her landlords. And she said that now she spends probably about 60% of her day on the phone to RTB, on the phone to them, emailing them. Basically, she feels like she's actually doing their job for them. So it's becoming like it's becoming a job in itself, the RTB. Like, the website is not fit for purpose, the processes are not fit for purpose. So she's actually spending 60% of her time kind of on the RTB. And I suppose when you have HAP tenants, you have the added workload when it comes to onboarding them, getting them through the system. And then more than likely you're going to get an inspection on the property pretty soon after they move in, I've got one landlord, and they were telling me that they have a HAP tenant in, and within less than 6 months they got an inspection, and the list was like about 5 pages long, and some of the stuff was just ridiculous of what they came back with. They had a letterbox. I should have shared the picture actually. They had a letterbox that didn't have the flap on it, but they had put the draft excluder behind it. And that was one of the things that was told they need to get changed because it could cause rodents. So it's like and that was just one of like 4 pages. That was one thing of 4 pages. So it depends on the type of tenants. Again, HAP tenants, they can be good, but they do put you in the firing line for increased kind of inspections and regulations. Airbnb. So this is an interesting one, lads. Airbnb. Is it allowed? So I suppose do your own research on it. But in general, if the property's not in the rent pressure zone, then Airbnb is allowed. They are talking about bringing in restrictions or some sort of register this year. So just keep an eye on that. But Airbnb, like, to me, that has to be a big opportunity right now, if you can do it, or you can find a way to do it, because there are very few Airbnbs in Ireland at the moment because of all these regulations and restrictions. So it's what do they say? Observe the masses and do the opposite. So if there's any way at all that you can kind of, do a bit of research and see, is there any way you can get Airbnb in? Like, you can make it, depending on the location, like you can do anything up to 300, 350, 400 euro a night with a minimum stay of say 2 nights. But it does, again, Airbnb is a business in itself, so you'd want to make sure you got your cleaners set up, and your systems are kind of set up. But it's a really interesting one. If there's any way you can kind of find a way to do Airbnb, that is a good way that you could try to make some additional money from your property. Repair and lease back to the council. So this is kind of like I think we touched upon it last week. Repair and lease back to the council is an initiative that the government tried to bring out for vacant property. Waterford, the county council in Waterford, have given out, I think it's 60% of the entire repair and leases since it began a couple of years ago. So they're really kind of active on giving them out, but they're trying to push the rest of the county councils to be as active as Waterford and give more out. So it's an interesting one. It's like vacant, it needs to be vacant for 6 months, I believe. They reduced it down to 6 months. The government will give, or the council will give you 60,000 towards the refurb to get it up to a standard. And that is interest-free money. So they're actually giving you interest-free money to do up your property. And then you lease it back to the council for, I think it's between 10 or up to 25 years. And then they'll give you 80% of the market rent. Now that is negotiable. You don't necessarily need to accept what they suggest to you. You can actually negotiate that. And then they will take off the repayment of the interest-free loan over the course of, say, 10, 15 or 20 odd years. So your rental income is going to be very much reduced, but two things. One, you got an interest-free loan of 60,000 to do up the property. And second of all, you've got a guaranteed tenant for 25 years and no maintenance. They maintain that property then for 25 years. So that really is like a lot of work up front, but then it becomes very passive then going forward. And I think that's the reason why a lot of people get into property, is to have that passive income. So I suppose, look, repair and lease is the most passive way, I suppose, to get some money from property. But you know, when it comes to property, it's like, if the more work you do, the more money you get. The less work you do, you know, the less money you get back. So repair and lease would be the less amount of money or less amount of work you do is the lesser amount of money you get back. And then on the other hand, then there's the rent to rent. So this is where, say, a property investor, say, like myself, take on a landlord's property, and we take it on, say, on a full repair and insure basis. So we, as an investor, become your tenant. We're like a corporate tenant, and we basically look after the maintenance of the property. So anything to do with the contents would be kind of our cost, generally speaking. And anything in relation to the house, the four walls, the roof, anything that's fixed, like the boiler, everything else like that, is down to the landlord. But the person who, the rent to rent, so the corporate tenant, which will be the likes of, say, me, or there's other investors out there doing that, they will organise everything. There'll be no management charges. You won't have to pay a letting agent because you're renting the property directly to us. You just have to give permission then for us to be able to rent it out, and most likely it will be a rent by the room basis, just so that the cash flow can be higher. So yeah, they're just different types of things that could be available to you, and it's not necessarily a one size fits all. So let's next slide, we'll move over to factors to consider before putting the property on the market. So I'll hand you over to Majella.
Perfect. Thank you for that, Lisa. I just get the screen up here first of all. Sorry. Now, so if you do decide to put your property on the market, there is a few things that you need to consider in order to get a smooth process and to get the most money for your property. So I'll just go through a few of them there. Number one is, I think Lisa, you touched on it earlier, is, are you selling your property with vacant possession or with tenants? So if my recommendation would be, if at all possible, to sell it with vacant possession, because you're going to have a bigger pool of buyers. It's going to appeal to families, it's going to appeal to investors, it's going to appeal to first-time buyers. Whereas if you're selling it with a tenant in situ, well, that means then that the market is limited to the investor market. And basically, investors buy with their head and their money. Families is where you'll get that extra price because it's more emotion based. The other thing you have to remember is that if you are selling with vacant possession, is that you have to give notice to the tenants. So it's really important to recognise that tenants' entitlements regarding the length of the notice, the refund of the deposit, and access for viewings and inspections. And there are certain clear rules about that, and they can be found in the RTB website. But just to give you an example of notice period. So this is regardless, take the winter emergency ban out of it. But if you had a tenancy and it was there less than 6 months, you have to give them 90 days notice. If you have it there less than 1 year, it's 152 days notice. If it's less than 7 years, it's 180 days notice. If it's less than 8 years, it's 196 days notice. And if it's more than 8 years, it's 224 days. So what you'll see is the longer the tenant is in the property, the more notice they're required to give. And now this is for tenancies that have been in place before June 2022, because since June 2022, we've a new cycle. This 6-year cycle is no longer available, and you've unlimited duration. So the most you can give to a tenant is 6 months. If you give anything over the 6 months, they have unlimited duration of the tenancy. Now, on saying that, there are certain grounds where you can terminate the tenancy. For example, if you're thinking of selling, if you're acquired for a family member, obviously if there's a breach of contract. Other ways would be like if you're thinking doing up the property, if it no longer suits the tenant's needs. So there are certain grounds, and again, they're covered on the RTB website. And a thing that I suppose, which I'm seeing every day as an estate agent, is especially with landlords who do their own lettings, and they come to me and they say they want to put their property in the market, and they've already issued a notice of termination to their tenants. It's a big, big problem that the notices are invalid, and there's a strict protocol for issuing the notice of termination. So just to give you an idea, it must be in writing, so email will not be good enough. It must be signed by the tenant or the landlord or his or her agent as appropriate. You must specify the date of service. So for example, if you were sending out post-it on the 1st of July, that's your, the tenant won't get it till the next day. And it must be posted on the same day by registered post to both the RTB and the tenant. You must state your grounds for termination, specify the termination date, and also that the tenant has the whole of 24 hours to vacate the possession. State that any issue as to the validity of the notice or the right of the landlord to serve it must be referred to the RTP within 28 days from the receipt of the notice. It must be accompanied by a statement or statutory declaration where required. So that depends on, like, if you're thinking of selling your house, you must have maybe, you know, proof of statement of evaluation from the auctioneer to prove that you're selling it. If, for example, you're giving it to a family member, you might have to name the family member who you're giving it with, to, I should say. So, you know, that notice, I think people underestimate the importance of getting that notice right. I see it over and over again of that notice coming back invalid. If, for example, you're in a situation you are going to sell your property with the tenant in occupation, you need to have clear details concerning the tenancy, the deposit, the rental history, and give them to your estate agent. Make sure to get them as early as possible to your estate agent so that, you know, any interruptions and things can be fixed. And the most important thing, and I really mean this is key, is to have clear and open communication between your estate agent and your tenant, because without that, you know, it just doesn't work. You'll have to, and that's why it's good to have an agent, a third party in there is what I'm saying, someone that can communicate on your behalf. They'll have to arrange viewing times, and look, people can be awkward, you know, they could say they're not allowing viewings in or whatever, but you have to be fair to both sides. So just to take that into consideration. And then moving on to the other thing you have to need to consider is your paperwork. I think I'll die saying this, but make sure you have your deeds in order. So if you have an existing mortgage on your property, you need to request your property of deeds. Do this as early as possible because it takes so much time. And another thing then would be planning compliance. So if you've extended your property or changed its use, make sure that you get compliance cert at the outset, because these things can hold up the property sale. Making sure you have things like your property tax paid, and other paperwork is very, very important to have to avoid unnecessary delays. Of course, if it's in a multi-unit development, just check that your annual charges are paid up to date, so that it's compliant. You'll obviously have to get a building energy rating certificate if you're putting on the market. And of course, we'll have the issue of you'll have to think about capital gains tax and what's allowable expenses. And Lisa is going to go into that in more detail later. So you've all your thing you've thought about whether you're selling in vacant possession, whether you're selling in occupation, you've got your paperwork in order, your notice given. Now, how else can you maximize the value of your property? So the first thing I'd say is ask yourself, who is the likely buyer of this property? If your property is in a good residential area, it's likely to appeal to families, and then it's really worthwhile to carry out improvements. It's worth taking that money. You might always start making sure that the property is structurally sound. But as I say, when you're dealing with families and if you're in a good residential area, you're appealing to emotions. So home staging is definitely worth considering there. However, if the target buyer is more likely to be investors, then you need to think more about what you spend your money on when it comes to improvements, because they can see past the works that need to be done. They buy with their heads, buyers buy with their emotions, or families buy with their emotions. However, certain things that investors would look out for obviously is rent, and they might look out for things like, is the property up to standards in terms of regulations like safety on windows and things like that. But as I say, an investor can usually see beyond that. You need to do more thinking when it comes to spending money on a property that's going to appeal to investors. But as a general, no matter what market you're targeting for your property, some general things would be declutter. Create as much space as possible and declutter. The buyer needs to imagine themselves living in your home. Give it what we call the curb appeal. In other words, make sure it looks right. Make sure it's power washed down, particularly if you're targeting families in that market, and give it a good paint and make sure it looks visually well. Again, concentrate in the garden, particularly again, if you're targeting families, because it's like another room in the house now. There's fierce demand for homes that have nice gardens. And the layout of a property is very important. Make sure they have functional areas. So if you have a 4-bedroom house, is it laid out that way? Or is it laid out as a 3-bedroom plus an office? Again, that will go down to who you're targeting. If you're a family, you might need to target the 4-bedroom, whereas if you're maybe a smaller family, you might say, well, they need a home office. It all goes down to your own individual property and who you're targeting. And needless to say, carry out any repairs and maintenance. So look around the house and see, well, what would turn a buyer off here? And carry them out, if they're not expensive. And because a buyer will come into a property and they look, and if they see something, if they see hinges broke or carpets torn or whatever, immediately they're thinking, okay, I'll have to reduce my bid here now because it's all going to cost money. So whatever the circumstances of your investment property in Ireland, the 2 most important things I always say are be well prepared, because then you'll have a smoother sale and as a result you get a better price. And communication with the tenant is crucial. They really, really are key to enable you to have the successful sale of your property, because allowing access and getting them to correspond with you. So I suppose I'll just give a summary really, is the first thing to do is, if you are thinking of selling your agent or selling your property rather, is talk to your local estate agent. Ask them for a valuation of your property and ask them for advice on how to present their property. Ask them for advice on what kind of demand is in the local market. Ask them, do they take into account and cover maybe issuing notice to tenants and dealing with them and communicating with them. Then you'll obviously go through the process of issuing the notice to your tenant and making sure that's validly done And then I would be talking to your solicitor, making sure you have paperwork in order, getting your BR cert done, make sure boundaries are in order, etc. Then start to prepare the house to sell, declutter, paint it up, get going, and then you're on the market. And as I say, all times, communication with your tenants is key. So other than that, there are the main considerations that I would think you need to consider before you put your property on the market. If you have any questions, I'm happy to take them. You can put them in the chat or feel free to reach out to me after. I'm an estate agent based in County Cork. I'm more than happy to help anyone get their property to the market. And if it's a case that you're up the country or somewhere, I'm sure I can recommend somebody that will put you in the right path. So with that, I'll hand you back to Lisa.
I have one question actually for you, Majella. How important is the BER to buyers in terms of, say, both a residential buyer, or not a residential, which put it a family buyer for the family home versus an investor? How important are you seeing? Are they really kind of looking for that now?
Actually, that was something we discussed at a meeting there recently, is that when the BR certs came out first, they were just a number. Nobody knew what they were about, and it didn't really impact on the value. But now in the past 2 years, the BR is a big dictator, especially with family homes or first-time buyers, because obviously you have to have an A energy rated home to get the first-time buyer's grant. You need a good energy rating to get the green mortgage rate offered by most banks. When it comes to an investor, it's less important because most of them are willing to carry out the work. There's a lot of grants out there to improve your energy rating, and they're willing to, go through the process and do that. Whereas if you have a family, they really don't want to go down that road. So it depends. It depends on who you're targeting, Lisa.
So majority of, say, if anyone's going to sell their property, it's probably unlikely it's going to be an A-rated house, because they were probably only been built in the last maybe 2, 3, 4 years. So someone might have a house maybe 15, 20, 30, 40 years old. So does that mean that if someone wants to sell their property and have a bigger target audience to buy it, should they do the BER work, i.e., insulate slabs, changing the boilers? Should they put that cost on themselves before they sell, or would you like test the market maybe before you do that and see what price you'd get before you do that?
Well, I suppose it all comes down to the location in the end of the day. If you have a good property in a good location, it's going to sell anyway. There's no doubt about that. But if you want that extra pool of buyers, if you want to attract those first-time buyers, if you want to attract those families, everyone is energy efficient head mindset now at the moment. Apart from getting loans and things, people want to reduce their annual bills and be more sustainable. So if you are in a position to spend money, the first thing I'd recommend is get the BR cert done. There'll be an advisory report with that, and that will show you how you can improve it and what grants are available to carry out those improvements. And if you're in a position to do that, absolutely, I think it's well worth doing.
So maybe someone that has a house that's maybe 20 or 30 years old, maybe on a C2 or something like that, that would appeal to an investor, or maybe a second or third time buyer who's maybe upgrading or downgrading, or depending on what their circumstances are, but most probably not a first time buyer.
Yeah, that is the situation at the moment. Yeah. But on saying that, there are exceptions, but in general, the better energy rating you have, the bigger pool of buyers you're going to have looking at it.
Yeah. Okay. And from your experience then, Majella, the buyers, what's the split like? Is it mainly first time buyers at the moment? Is it kind of, what would you say the split would be from your experience?
So at the moment, like the majority of the market definitely is first time buyers. And I think that obviously was helped with all the grants and, you know, new builds in there. We are seeing we're seeing a lot of interest from trader uppers to sell their properties, but they're reluctant to put them on the market until they find another property. And as we all know, stock is so low in the second-hand market. So I think obviously first-time buyers are running for the new homes where they'll get their grants, but the second-hand market stock is very low.
So that will make the prices go up then. So there is a light at the end of the tunnel. Yeah.
Absolutely.
Okay, cool. All right. So right. Thanks a million, Majella. Anyone else got any other questions? Again, put them in the chat, or if they want to talk about anything, I can take you off mute and we can have a discussion. Anything you want to talk about, just put it into the chat. So next, let's talk about capital gains tax. So I am going to share my screen.
Sorry, can I just disturb you there, Lisa?
Yes.
Can people put a question in the chat, or is it muted? I think here the chat is muted.
Oh, really? Because people are putting in their locations.
Okay, it's just
oh, you're right. You're right. Sorry. Right. Okay, guys. Sorry about this now. How do I unmute? Oh, can you put? Okay, okay. Sorry, guys.
Oh, sorry. Perfect. Tomas, you're in. How much notice do tenants have to get if they want to move? It's basically half of what the landlord would have to give. It's normally about 28 days, that kind of thing, Tomas. Again, depending how long they're there. But if you go to the RTB website, all the notice periods are there. And the reason I say go to the RTB website is they change so often, Tomas.
It's crazy, isn't it?
Absolutely.
It's actually scary. Right. Okay. So let me know. Can you see my screen here? Can everybody see my screen?
Yeah, I can see it anyway, Lisa.
Okay, so this is a lovely boring Excel spreadsheet. I know there's definitely one accountant on the call, so I'm sure she's going to like this one. So let's look through say capital gains tax. So the end of this month, you're all ready. You've done everything that Majella's after saying you have to do, and you're ready to sell on the market. So we're going to put your house up for sale, say 350,000. Okay. We're going to have legal fees in and around 2.5 grand. Could be a bit more, could be a bit less, could be a bit more, but effectively it's probably going to be 2.5 grand. Auctioneer's fees, possibly is it going to be a percentage of it's going to be a percentage of the selling price. So I've said 2% there as a percentage of the selling price. Then look, accounting fees, €1,500 to sell. You might not have a full €1,500 to sell, but look, there's going to be other contingencies in there. So 1,500 is is a prudent figure. Valuation fees, again, €200, but 9 times out of 10, the auctioneers tend to cover that fee. Because if you give them the property to sell, they'll cover the fee for you to value the property. So then that means that your net proceeds from selling that house is actually going to be 338,800. So next we come down then to the costs. So you purchased this property, say in 2018, and say you purchased it for 160,000 back in 2018. You would have had enhancement costs over the years. So enhancement costs are anything that are anything to do with basically the 4 walls, the windows, the roof, any kind of anything that a new kitchen, for example, a new bathroom, anything that enhances the property. Now, it's not repairs and maintenance. So repairs and maintenance, say painting the property, any costs that you would have expensed in your P&L during the lifetime of the asset is more or less not allowed here. Okay, so you really want this enhancement cost to be as high as possible, and I'll show you why in a minute. But in general terms, if that cost was claimed against your rental income during the course of you owning that asset, then you can't claim it for enhancement expenditure. So it's only something that actually enhances the building, which could be a kitchen, a new bathroom, an extension, anything like that. Stamp duty, 1,600. You would have paid €1,600 back in the day, so you can take that off of this. And you would have paid about £2,500, possibly more, possibly less, when you purchased the property. So overall, your cost, say, for this particular property is deemed to be €214,000. So you've sold for a net figure of 338,800, and your deemed cost is 214,100. So therefore, they called it a chargeable gain, is 124,700. So when you go to sell that property for 338,800, you've made a gain of 124,700. You get a lovely, really high, I'm being sarcastic here, annual personal allowance. So you're allowed to make a gain every year of 1,270. Now that hasn't changed in years, and it definitely should do, but you're allowed to make an annual gain of 1,270 without being taxed on it. So your net taxable gain now is 123,430. Your capital gains tax is at 33%. So you can see here that you're going to owe €40,732 in tax. And so therefore in your pocket, what's going to be left in your pocket is not 338,000, which is up in line row number 6. It's going to be €298,068 after paying the tax. Now remember, that tax then is payable on the 15th of December. So if you say sell your property on the 31st of March, that tax is going to become payable on the 15th of December. So other considerations, I suppose. They were given a tax incentive to try and stimulate the economy back in after the crash. So any property that was acquired during those 3 years, the 7th of December and the 31st of December, sorry, between those two dates, the 7th of December 2011 and the 31st of December 2014, the 7 years are now up. So if you sell a property that was purchased during that time, you get full CGT relief. So you can see there that if that purchase actually happened not in 2018, but it actually happened between 2011 and 2014, you would net that 40,000 of a tax liability would effectively be wiped out. So if anyone did actually buy property back in those dates, could be it's a nice time. The market is pretty high at the moment, and it could be a nice time to kind of avail of that relief maybe. Other considerations would be retirement relief. Now, look, if it's straightforward buy-to-let property in your personal name, well, then this doesn't apply to you. But just say, for example, it's not a residential property, it's a property for your business, and it's forms part of your business. The certain criteria, if you satisfy certain criteria, like if you're over the age of 55, and it's being sold as part of the whole business, well, then there's some real generous kind of retirement reliefs out there. But again, it really won't be for residential property. It will be for mainly commercial property that's used in a business. And then bear in mind that if you want to gift this rental house, to your children or to a relative or to someone else, they will get capital acquisitions tax. So that's CAT there. So capital acquisitions tax is effectively the exact same as capital gains tax. It's calculated more or less in the same way. So if you gifted this house, say that was say 350,000 to a relative, they would then be paying 33% effectively on the value of the gift. If you ask them to pay some money towards it, so say if you asked them to pay 160,000 towards their house, the house that you're going to gift them, well, then they would be paying capital acquisitions tax on the 123,000, say. Again, capital acquisitions tax is at 33%, but it's worth bearing in mind two things with capital acquisitions tax. So the first thing is if it's a child, they fall into Group B, and they're allowed to receive up to 335,000 in lifetime gifts from their parents, tax-free. So you see where the this figure here, say this 338,000 here, that would more or less, if you gifted that to a child and that was the only gift that you're after giving them, well, then that's actually tax-free for them. However, you will still have capital gains tax. You will be deemed to be disposing of an asset, and you will have you'll have capital gains tax. If you give it to, say, a niece or well, no, let me think, a grandchild, they would fall into this middle category here, 32,500. So that means that you will give them a property, say, for 300, that's valued at 350. They're allowed to receive 32,000 tax-free, and then they have to pay capital acquisitions tax of 33,000 on the net difference. So not only will you have capital gains tax when you sell, your relative would also possibly, most likely, have capital acquisitions tax, but the capital gains tax that you paid can be offset against the capital acquisitions tax that they paid. So then effectively it reduces the amount of capital acquisitions tax that they receive. So look, in general terms, I would say don't gift a property to a relative, I would say, because if you are intending on giving a property to a relative, like, there's other ways of doing it, and gifting it possibly isn't the most tax efficient way of doing it. There are other ways to do it. You can put them in, you can find out about trusts, and if you just leave them in, say, your will when you pass away, well, then there's only capital acquisitions tax to pay on behalf of the relative, you know. So look, there's ways kind of around it, but I'd say possibly don't be thinking about, say, gifting a property to a straightforward property to a relative. There's other ways. Get some tax advice, I would say, and also possibly look into maybe if you've got kids, young kids, possibly there's ways to kind of put property into trusts, maybe making them a partner in a partnership, so that they jointly own the property with you, so that there is no kind of impact when it comes to selling the property. Right, so let me come back to the slides. Right, so stop sharing. Sorry about this now. And I will now come back to the presentation. So,
sorry, Lisa, can I just add there a question that I'm asked a lot? Is a landlord maybe that who lived in the property for, say, 5 years and rented it for 3 years, you know, they'll only have to pay, obviously, the capital gains tax on the years that it was rented for. So they, you know, that's because I know a number of landlords come to me and they think they have to pay it on all the 8 years. It's just the amount of time that it's not your principal private residence.
Yeah, that's it, exactly. Yeah, so say if you're upgrading your own house and you're living in it full time, and there's a massive profit on your house, there is absolutely no tax as long as it's your principal private residence. And say someone then that they maybe had a house and then they got married and then they moved into a different home, but they kept their own house for renting. Like Majella said, it's just the period in which it became an investment property that you're liable for capital gains tax. And it's a very simple calculation. So say, for example, you owned the property in total for 10 years, but you lived in it for, say, 6 years and rented it for 4 years. It's very simple that you calculate the chargeable gain in exactly the same way, but you divide by 10 years and you multiply by 4 years. So it's a very simple kind of calculation. So it'll be, you know, it's very simple. But again, my advice would be get tax advice, and also just be aware that, you know, there will be a tax charge, and you will need to kind of set that aside to pay, because you more or less have to pay it in the same year that you sold the property. Okay, so what else can a landlord do with their money? So I suppose there's all different things. So this is, say, for someone that has sold their property now. They've got money now sitting in the bank. They've used it to, say, pay off any mortgage debt that was on the property. They've set aside some money for the tax, and now they've got this money just sitting in the bank. So just a pre-warning here, I'm just going to bring you over to my website. So what I do, say, again, there's there's investors out there, private investors out there, who will allow you to, say, invest with them. So you can give that money to an investor, and they will give you a fixed return on your money. And in some cases, well, always in my case, I give a first charge on the property. So what that means is that rather than you have money sitting in the bank, money sitting in the bank is the worst place you can ever have money, regardless of where you put it. It shouldn't be sitting in the bank, especially in today's climate. So today's climate, we have high interest rates. We're running at around 10%. So say if you have 100,000 sitting in your bank right now, that 100,000 is losing 10,000 every single year when inflation rates are at 10%. You're even seeing that now with like energy bills. If you even go out for dinner now, if you actually notice, like, you know, a dinner might have cost €9.95 like maybe 2 years ago, is now costing like $15.95. So you can see everything has gone up in value. But if you have your money sitting in the bank, that's the one thing that's never going to go up in value, because the banks are not giving any interest on the money at the moment. We have 3-pillar banks in Ireland. So unlike other countries where there's lots of competition, and therefore they'll be fighting for your deposits, because there's 3-pillar banks, they're very slow to put up the interest rates. And even then, it's going to be very slow. They're going to be very slow to give interest. So having it sitting in the bank, it just in general terms, it is not a good idea because of inflation, because of high inflation. So I'll bring you over to my website now. So say, for example, that didn't work. Here it is. Say, for example, right, let me see, can I share my screen? Back to sharing my screen again. So tell me if you can see there now. Yeah. Okay. So if you invest, say, 100,000 with say someone like me, now there's many of us out here, so you can go to anybody that you feel kind of comfortable with. Say you invested 100,000 with me, you would receive 6% per annum. You'd be paid your interest monthly, so effectively it's 30% over 5 years. So say you invested 100,000, you get €500 every single month. That comes to €6,000 a year, and then over the 5 years you'd get 30,000 in interest alone. And then at the end of the 5 years you would get your €100,000 capital back. So therefore you've like at the end of the 5 years you get your 100,000 back. So in the space of 5 years you've earned 130. Again, if you have more money to invest and you had put 250 in, you'd get 1,250 back every month. You'd have an annual income of 15,000. Therefore, total income over the 5 years of 75,000. And that, you know, basically at the end of the 5 years, you're after getting €325,000 back. If you had the 500,000 to invest, you get €2,500 just in interest. And then again, 30,000 a year, which is 150,000 over 5 years. So that 500,000 at the end of 5 years is worth 650,000. So I suppose this is effectively like if you had, say, the 250, monthly income of say 1,250, that could be someone's rental income. And this is literally just making it so passive for someone in that they don't have to worry about tenants, and they're leaving it up to someone who kind of is doing it as a full-time business. If they invest this type of money, they get a first charge over the property. So first charge is exactly what the banks look for when they give a mortgage to a property. So let me just get back to so you can see me. I'm just going to unshare my screen. So first charge is what the banks give, or sorry, what the banks look for when they loan you money for your property. So it's the highest level of security that you can actually get. So it means that, like, you know, someone can't sell their property. If someone tries to sell their property, they just can't, because you've got like a lien over their property or a hold over their property. And then at the end of the 5 years, then we refinance through the banks and pay the investor their money back. So I've got a question there. How do you go about performing the correct due diligence in terms of new potential tenants, and what is, oh, right. So we'll go back to the tenants in a minute there, Alan. So yeah, so investors, then you can put your money in with an investor. Now there's lots of us out there. There's I could pick kind of, there's 10 on my hand that I know that are doing this, but I would say you just need to kind of trust someone if you're doing it, because you can have all the security in the world, but if the proverbial hits the fan, then it's going to be a long drawn out legal process to kind of make sure that you get your money back. You will get it back, but it's just a long drawn out process. And so I would say just make sure you trust the person. Right, so let me just, sorry, now I'm going backwards and forwards. I should have had this kind of a bit more. Right, so that is the end of the talk as such. I think we'll discuss latest developments, but first of all, I'd like to kind of share with you, we're setting up, myself and Majella, we're setting up the South Property and Business Network for, as you can see, the South. We're going to have a keynote speaker every month. It's going to be held in the Silver Springs Hotel. We're going to set like it's either going to be like the third or the second or the third Thursday of every month. But the very first one is going to be Thursday, the 20th of April, 7 p.m. in the Silver Springs Hotel in Cork. And our first keynote speaker is going to be Pat Slattery. So Pat is no ordinary speaker or coach. He left school at the age of 14. He's from Limerick, from Moyross in Limerick. He began working in the hotel industry at 15 years old, and he's basically grown multiple businesses. He started his security business, and he's started multiple businesses now. And he's achieved over 25 million in sales. He has a keen interest in property. So this guy, he just does property on the side. His main business at the moment is public speaking, business mentoring, business coaching, but property, he's always been involved in property. So he's going to be a really good first keynote speaker. And yeah, tickets are €25 just to cover the cost of the hotel. We can only hold 50 people, and it's just a good way to kind of, we'll listen to the keynote speaker, but after that, then it's all about kind of networking, you know, maybe doing business, not just about property, there's also business. The idea is we're going to bring different kind of entrepreneurs, different kind of thought leaders into the network to do a talk every single month. And then afterwards, then just everyone can network together to try and see, you know, if there's anything we can do together. So that is the South Property and Business Network. And I think we'll go to the latest developments and some questions. So first of all, Alan, and I'll give this question to you, Majella. How do you go about performing the correct due diligence in terms of new potential tenants, and what is the best way to market a property to rent?
Okay, so Alan, the first thing I'll say is that it's actually getting more and more difficult to screen tenants, because there is so many of them out there that if you put up a property to let, say on DAFT, which as agents we don't do anymore because we cannot deal with the influx of inquiries, but if you did put up a property to let, you're guaranteed to have hundreds of emails in, And when you ring them up, a lot of them won't even know what one they're inquiring about. They won't know what county. Anything that comes on, they will just apply for it. So that's one thing you need to be aware of. The other thing is how to find a good tenant. Again, very hard to know. You can receive excellent references. And now, because a lot of landlords are looking to get the tenants out of their property, they may give a good reference for what may have been not a good tenant, put it this way. So you really need to, I'd always check their employer's reference, maybe make a call to the employer. But if you go to your local estate agent, they will have a list of vetted people whom they would know that would be suitable for your property. So going back to where would you advertise it? Obviously, you can go on Daft, but you will get that influx of inquiries. And like I'm based down in West Cork, and I had put up a property there a few months ago, down in West Cork. I had somebody from Dublin ring me to know, was it far from the Lewis? So you are going to get that kind of thing, you know. People are just so desperate, they will apply for everyone. So for everything, I should say. So my best piece of advice is to go to your local estate agent, Alan.
Yeah, and then my advice on putting it out to rent is I've gone to Daft myself, and again, the first hour I'm just influx with people. Like I'd say I probably got about 100 applicants in the first hour. So and they're not looking at the ad, they're not wondering whether it's suitable for them or not. They're just sending out blankets, applications. So one thing that I do is I set up a new Gmail account. So say whatever the property is called, say it's called Wellington Street. I'd set up a Gmail account, wellingtonstreet@gmail.com, and then I'd log on then to Daft if I was putting up on Daft under that new email address, so that then you keep all of your applicants into the one Gmail account, because otherwise it will just bombard your email and you won't know where to start or finish. Yeah, so Alan said, yeah, it makes sense. Majella sounds like a minefield. Yeah, it definitely is a minefield. And look, do you know what? Gut feel as well when it comes to a tenant. You know, there's a lot to be said. Oh, hang on. Is it said the chat is muted? Makes sense. Settings. Unmute. Okay, save. Okay, so it's gut feel about your tenants, lads. At the end of the day, these are people. If you have a feeling that they are, gonna mess you around, then, I've had a lot of tenants then as well. They don't tell you that they're HAP, so they try and get in. They try and get you to sign an agreement, and then they tell you then afterwards that they're HAP, because they know, like a lot of landlords, they're not allowed to kind of say that you don't want HAP, but they will end up they'll lie to you. And I'm just thinking, look, if you're going to lie at the beginning, what type of tenant are you actually going to be? So yeah, just be kind of wary about the tenant, and probably go with a gut feel on that person as well. I look for 3 months bank statements. I look for 3 months pay slips. And again, try and get a reference from the work. Now, 9 times out of 10, the types of tenants that I go for, they're kind of probably in that like low mid wage, like a labourer type wage. So therefore, their manager or their bosses are desperate to get them to work. So therefore, they'll just give any reference. Yes, he's perfect. So just be careful of that, because everyone's desperate. Businesses can't get their workers, and when they do bring workers in, they can't get houses for them. So there could be that little bit bias. Yes, they're brilliant, and they might not be. So Emma, hi, Lisa, Majella, I have to go. Oh yeah, no hassle. Thanks a million for your time, Emma. Thank you. Does anybody else have any questions? And if not, we'll just go to latest developments. So let's talk about the latest one, the eviction ban, and possibly more interestingly is what the government are going to talk about, maybe to sell to the council. Is that what they're talking about, Majella, or is that kind of what they're alluding to possibly?
There is nothing set yet. So basically, the only announcement that came out is that the eviction ban isn't being extended, but there's talks of putting something in the next upcoming budget, to give tax relief to landlords, and to ensure more security of tenure for tenants.
Yeah. So look, there's talks that what I'm reading now, there's talks that you can sell your property now with a tenant in situ, but what they're asking is that first you give permission, or sorry, you give the tenant first choice, first refusal, on selling the property, and then secondly, then you can sell to the council. But I suppose I think that offering to sell to the tenant is just lip service. They're a tenant for a reason. They're very unlikely to either be in a position to or even want to purchase the property, because they might not come from that county, and they might just be there working temporarily. They could be from a different country. So really, I think that what they're talking about in the media at the moment about giving first refusal to the tenant, that's just lip service for the tenant, just to kind of offer something. I would say that giving it to the council would be offering it to the council again. If there's only if there's a HAP tenant, like if you've got a HAP tenant or a council, it's going to have to be HAP really. If you've got a HAP tenant, then that's the opportunity then to sell to the council. But look, if there's a private tenant in them, then I can't see how the council can be seen to be buying that property. Maybe I'm wrong. What do you think, Majella? What does anybody else think?
Well, a council we would sell to the council a lot of in a lot of times. But the one thing they'll ask for is, if I was selling a 3-bed semi, who's the underbidder? If the underbidder is a first-time buyer, they will not interfere. They can only place bids on, say, against investors. The other thing is, a council will not buy a house where there's a tenant in occupation, because it's no good to them.
Yeah, so it's going to be hard to see how they're going to do this. Sarah, you said that will be too late. What will be too late? If you could just put in the chat there, and we can or I can unmute you. Let me see, can I do that? Sorry, I'm really bad at technology, guys. Yeah, so
sorry, somebody asked for the recording there. It's too long to be recorded, so we put it on our Facebook group. Now if somebody knows a way of sending along recording via email or whatever way, please let us know. But it's in the Facebook group.
And it's going to be too big to send by email. Now, I actually, being as you're all logged on, I believe that I can send the recording, and you can it's saved in this webinar, so you'll have access to it via this webinar. I think is the thing. It's just the people that hadn't logged on to this, they wasn't able to get access into the recording, but I think we can actually give the link to this. Okay, so Sarah is saying the government helping landlords in October, as more landlords will have left by the end of the year. Yeah, I think so too, Sarah. I just think there's going to be a mass exodus this year, and I think it's too little, too late. And I think that I honestly think it's unconstitutional, kind of the whole regulation that's in the market, and that it's too little, too late. But they've got to be seen to be doing something. And Sinn Féin are hot on their tails. They're immediately out with government bashing as soon as they bring anything out in relation to the landlords. So they're all very conscious of what it sounds like. But they've created a rod for their own back because of the rent pressure zones, because of all this regulation that they've put, because the RTB is just not fit for purpose. They've created these massive kind of rods for their own backs, and now they've got to slowly backtrack, and they've got to be really careful about what it comes across in the media. Because and then, as I said, Sinn Féin are hot on their tails just to kind of, obviously they're trying to get into government or whatever. Now personally, I think everyone's kind of a bit nervous about, you know, what the government might look like in the future. But I just think that they're just trying to get into government, and they're saying all this to get into government. But at the end of the day, you know, they're not going to be able to put any more regulations on this. It's just not possible, because it just won't work, you know. So it's just all kind of like a showboating just to kind of get into power, is what my opinion is. Do you kind of, what do you think, Majella?
Yeah, I think, and Sarah, I think another reason, like apart from all this regulations and things, is, you know, a lot of landlords have come out of negative equity now, so they're seeing a good market, so they're saying, yeah, it's time to cash in now. So, you know, people don't know what property prices would be like in the future, so a lot of landlords are banking on the premium prices as well.
Yeah, Sarah saying I agree. Yeah. So in terms of like the eviction ban, then, Majella, what's the story? So 31st of March, the lifting of the eviction ban. What can anyone do? Should they start now, or do they have to wait until the 31st, or what's?
Well, you can issue a notice, but they won't come into effect. So, for example, if you issued a notice last October, we'd say your tenant cannot get out until April or May this year. So you could still issue notices, but they wouldn't come into effect until April or May this year.
Yeah.
And again, depending how long the tenant is in it, it could be June.
Yeah. Okay. So get going now. If you are selling, get going now as soon as possible.
Absolutely.
Yeah. Okay. And are you seeing any?
It's not as straightforward, you know. Issuing notices is one thing, and you can do everything legally right, but the communication with the tenants is key, because in the end of the day, see, you can't be, I suppose, in the legal eye, you can't make someone homeless. So, and because the RTB isn't very efficient and isn't functioning really, you know, to get somebody out is very hard. So always start early.
And just say, for example, right, if you do have a feeling or a niggling that your tenant is going to play every, you know, because they're going to be homeless and they're going to play every kind of card that's available to them, and you have a feeling that they're going to do that, is there a way that you can ensure that there's proof that they've received notice, that they can't say that they never received it? Is there any tips that you can give kind of for that?
Well, the one thing you have to do is, when you're issuing that notice, register it by post or hand deliver it. And the other thing is, that notice, the exact same day you send that notice out to the tenant, you must also send it to the RTB.
But just in like kind of practical terms, would you take a video of yourself delivering it into the house, or a picture to timestamp it?
I mean, you can. I haven't seen it done, but you can. As I say, registered post is kind of guaranteed way. Maybe you get them to sign when they receive it. Going in person and handy to them is another. But yeah, I think where I see a lot of the problems come is, the tenants get the notice, they play away with it, but when it comes to the property going up for sale, they won't allow viewings. And you know, that's where the estate agent have to come in, maybe offer them an incentive, maybe it's a case of a month's rent off or something, make some negotiation there to get in there for the viewings, because you don't want to wait till they're gone. In a lot of cases, now some cases you'll obviously be better off selling in vacant possession, but if you have to sell with a tenant in occupation, you know, you have to be flexible with them.
Right. Okay. Yeah. Okay. Look, if there's any other, life is going to be more difficult for landlords. I get there is homelessness, but I want to move back into my home in 𝗟𝗵𝗃. I should be allowed with no hassle. Look, that's my biggest problem, Sarah. I'll be honest with you, is that, you know, and this can be, I don't know, is it controversial or not? But look, we've taken a risk. We've invested in property. They're our assets. We own these assets. And it just, you know, I don't know how it's constitutional that they have so much control over what we can do with our assets. And I go to the UK once a month for, you know, training and mentorship and all the rest of it on property. And they're really, really tight on certain things like safety. so electrical safety, gas safety. They have licenses for a house of multiple occupancy where they rent out by the room. Their safety checks are second to none. And like, you know, registering their deposits, they're all very much regulated in that respect. But they don't have these regulations about, you know, when you want to, you know, kick out your tenant. They've got notice periods, but they're reasonable notice periods. And it's just the landlords have control over their own assets. And to me, that is the fair way. Like, to be a landlord, we can't operate without tenants. So it's in our interest to treat tenants really good and treat them well. So to put all this extra regulation, the government are putting all this extra regulation, it demonizes us landlords and basically says underhandedly that landlords, you're bad people, tenants, here you go, here's some more rights. So, but if those regulations wasn't there, we would have to treat our tenants well, because at the end of the day, they're our customer. So why wouldn't we want to treat them well? So yes, I think that it's crazy that we are being made to kind of, you know, all these rules and regulations, and especially the fact that the RTB is not fit for purpose. You know, to have a letting agent spending like over half their time on the phone to RTB, you know, that's crazy. That is just absolutely crazy. So Sarah, I was a forced landlord because I moved to Dublin for work. So now, Sarah, like, you want to possibly now move back to Kerry, but you've got a tenant in them. So, you know, yeah, it's a difficult market to be in. And as I said, I really don't know if it's going to be the market for, you know, one or two property landlords. There's got to be a way out of this, but right now I don't think the government are going to move quick enough because of this whole policy, you know, their whole being political and what it sounds like. They've created a rod for their own back by putting on all these regulations, and now it's going to be very hard for them to strip them all away. So I'd say they're going to do it via tax incentives, but as I said before, I think tax incentives are closing the, what's the word, opening the gate but the horses, or closing the gate but the horse is already bolted. It's the rent pressure zones and the RTB really need to be kind of, in my view, they need to be really looked at before they can look at tax incentives. Okay, so we have, I think that is if anybody's got any other questions, I would say put them into the chat box, but if not, it is now 8:30.
I mean, feel free to reach out in our group, our Facebook group, and myself and Lisa will be monitoring that. So if you have any questions about investing or indeed selling your property or anything like that, reach out to one of us and we'll be keeping an eye on the group, and we're more than happy to help and guide you forward with that.
Great. I got one question here. So what's the good news, says Thomas. I love that.
The good news is we're near the weekend. The good news is we will be in Cork on the 20th of April.
That's the good news. And the good news is, look, you know, there's always opportunity in a market that, you know, observe the masses and do the opposite. So, you know, just talk to people, start kind of bashing heads together. There's ways, I'm sure there's ways that, you know, we can do stuff. That I'm working on ways, say, with different investors, different landlords. There are ways out there, but you do need to work together with people. I would say that, you know, doing it on your own is not, you know, yeah, what is, you know, there is a difficult market. Also, solicitors, you know, get some legal advice, pay some money for some legal advice. They can be worth their weight in gold. So there is some good news, but just bash your heads together and, you know, observe the masses and do the opposite. There's definitely something to be done in this market. So get together, investors, landlords, get together, chat together. You know, that's my advice. Okay, guys. So if there's no one else, and there's no snow yet, Sarah, yeah, that's definitely a good news. There's no snow.
I think there's somebody else typing there in the chat, Lisa.
Okay.
Alan.
Grand, super, thanks guys. Thanks very much for the engagement. It keeps us kind of on our toes, and
absolutely,
because these webinars, like, you're not kind of meeting with people, so it's really good when people kind of, you know, chat and engage on the webinar. So again, thanks a million. And yes, so I will say well done. Thank you so much, John. Hi ladies, my dad passed away and signed over his property to me. I'm thinking of selling. The house was valued at 140 in 2018. When it was signed over, the auctioneers priced it at 220. How much capital gains tax do I pay? Okay, so you should have an email there. It just says a guest. I don't know who it is. You should have an email there that this came out from. So reply back to that email, and we can have a little look for you. Again, I'm not going to give tax advice, and I will give you advice to go to your tax advisor, but I will help you work out a rough figure, like a general figure for you.
Where are you based, Fiona? You might
okay,
just let us know what part of the country you're based in as well. Cork. Okay.
Cool. All right.
So, Fiona, if you want to, feel free to reach out to me, and I will guide you on that there as well. Perfect.
Okay. All right, guys. So reply back to the email, Fiona, and one of us can help look. But yeah, we'll look into that. So thanks everyone who stayed on to the end, and we will see you again, hopefully at the networking meeting in the 20th of April. Thanks, guys.
See you all. Bye. Okay, so we can stop.